Hey, all, Sean Malone, Digital Business Masters. Hope you're well. Another DBM strategy call. We cover these every single week. Have done for months and months and months, and it's all about making sure that you run your digital asset business. Business. It's not a pastime. It's not a speculation. It's not a hit and hope. It's not a hobby. It's a business. If you don't want to run a business, then you're not in the right place. If you do want to run a business, then stick around. Okay, we're here to support you and making sure that you achieve what's possible in this communications age on digital platforms. Quite phenomenal. It's the biggest information, the most powerful information in the world in 2025. You either get that or you don't. All right. So we'll provide all the big picture stuff as usual, which is what we do every week on the strategy call. And then in the second part of the call, we'll go into how to apply that information as you deploy your assets in various ways to create yield and equity. All right. And we'll also touch this week on what happened last week that stopped so many people, especially the retail space. Yet again, the retail players got wrecked. When will they ever learn? Well, they won't learn unless they're educated. That's the bottom line. That's why we set the academy up. We're not here to give you any advice, certainly not financial advice. What you do as a grown adult is your business. Put your big boys and girls pants on, face what you need to face, fill your skills gaps, sort your mindset out, put your life on track, and put yourself in a position whereby you do not speculate. You make sure you understand what goes on in the world in leveraged assets in the right manner, not long shorts, leverage trade, all the things that wrecked people last Friday. It's quite simple. Your job is to move from the top of this infographic. Stop exchanging time, skill, and energy for devaluing currency. And start exchanging time, skill, and energy for accretive assets. And then use those assets to create cash flow in order to fund your life. Don't buy your life. Fund your life. Again, if you don't understand the difference, you need to read, you need to educate yourself, you need to work with people who've got what you want and can prove it. Don't be 100% reliant on bosses, banks, and governments, and put yourself in a position whereby you're in control. That's what skills are. Skills breed confidence. Confidence breeds momentum. Momentum breeds more confidence. It's all about confidence at the end of the day. And you need to face where you're at with that and either be a victim or a winner. So people ask all the time, how do we structure such a thing whereby we're able to comfortably, month over month, year over year, decade over decade, how are we able to continually outpace inflation based on accretive assets? Well, if you've ever run a business, you'll know, right? It's all about owning a balance sheet. You make sure your balance sheet is something that you can leverage, properly leverage. Yeah. I keep mentioning that word leverage this week because it was just disgusting what happened last week. And it was people's fault. Crazy what people do. If you work a proper business and you understand patience and have the fortitude to work through the necessary that it takes to build a balance sheet, and then you're very careful with how you use that balance sheet, then you'll be absolutely fine. Yeah. So we predominantly at these days focus on digital assets for our digital business balance sheet, as you'd expect. But again, those who run business in the community understand you can do this with land, you can do this with property, you can do this with equipment, you can do this with all sorts of different things. You can even do it with an order book. But the reason we love this space is because we do not need to go cap in hand every single year, 5 years, 10 years, the usual cycles in normal business. We don't need to go cap in hand to a bank manager. We are the bank. And that's predominantly built on something called Bitcoin. 68% CAGR year over year for the past 14 years. The longer you've been involved with that in that 14-year period, the more powerful your balance sheet becomes every single year. If you've only been involved with Bitcoin for, say, the last 5 years, then it's a 30% CAGR. And you just build up from there. If you only got involved with Bitcoin this week, then it builds up as it goes, right? Your job is to stick with your business. Stick with your business. Don't speculate, and certainly don't think everybody else is there to owe you a living. The equity side takes patience, obviously. It's like building up, but it's nowhere near as longer term as, say, the home you might be sat in right now, which may have taken decades for you to draw down from or appreciate into because you're paying down a mortgage. You don't own that building. The banks do. If you own a business, then you'll know that on average it's every 5 years. Yeah. With Bitcoin, you can do it every year. If you've not run the collateral planner tools inside the DBM Academy yet, accessible through your system subscription, then make sure you do run those collateral tools, especially if you're lining yourself up for liquidity events, because liquidity events live within the yield. So assets such as USDT, USDC, we purposely target methods and ways in which we can yield 10% a month. That's what we specifically target. Now, does that always happen every single month, month in, month out? Once you do it once, it's going to be done forever? Of course not. You're running a business. So you've got to find multiple ways to do that. And that's not easy because it's new. DeFi is new, right? Smart contracts are new. The way we do that is still being figured out. But we have lots and lots of experience, lots of depth, and certainly lots of working capital available in multiple projects that we simply manage through until the liquidity event arrives. And then we find other mature ways. As the world moves towards this technology, it's easier and easier and easier, which is why we're focused very much on TradFi as well these days at the Academy, not just DeFi. And then if you're really sophisticated, and this again, what happened last week is a lot of people, they don't work altcoins in the sense of understanding what they are, where they come from, the utility, the purpose of the businesses, the owners of the businesses, the sophistication and ability of the business owners. They don't look at any of that with altcoins. They just throw money in and hope for the best. And worst of all, they start to leverage. They'll put on longs and shorts and all sorts of crazy things. They'll try and use altcoins as collateral. That's crazy. Why would you collateralize altcoins at this stage? Leave that to Bitcoin. But what do people do? They try and get rich quick. They try and be smart. And then they get completely annihilated. Just on the back of two huge countries having a mix-up over language when it comes to tariffs one way, tariffs the other. Just like that. Well over $20 billion. Well over. You can probably 5x that. That 20 billion is only notable through what you can see in the exchanges. Way, way up towards 100 billion, in my opinion, actually got wiped out. The biggest liquidation event in crypto history. Simply because people are people, especially retail. They'll go and throw things in thinking they're smart, and all you're going to do is get annihilated. That's what the altcoin space is predominantly made up of. But if you understand the fundamentals, the people behind the businesses, simply a digitalization of existing financial and business structure that we've spoken about for years at DBM, if you understand that it's just simply a transplant and all that's happening is accessibility and speed and dynamism is improving, and you're able to stick with those visions of often what they are right now is visions of what can be, and you stick with it, then you'll be fine. But you certainly do not leverage altcoins. So the whole idea is if you're a sophisticated member of DBM, you'll understand what we do with the altcoin side of the industry. And why do we do that? Well, because we know we can accumulate equity and yield in one ecosystem rather than doing what we do over in the left-hand side, which is quite a complex, convoluted way of continually massaging our balance sheet into smart contract yield. Right? Both are perfectly fine, but you need to understand what you're doing. Yeah, you need to understand what you're doing. And when you do it well, you look at these dumps, these big correction events as absolute opportunities. Congratulations to any of you who were able to pick up, say, Bitcoin at 109 or down as far as where Ethereum went and Ripple went and Sol went and everything else. Yeah. Congratulations if you understand how to manage working capital so you take advantage of other people's stupidity. Unfortunately, that's business, that's life, that's markets. You're here to take advantage of people who don't understand what they're doing. But was it ever thus? How do you understand what you're doing? Well, you get educated. You work with people who know what they're doing. And the whole idea is many years ago now, 5 years ago, we set up the DBM Academy knowing that this is a problem. This isn't just a problem in so far as people speculating on new communication, AI age, blockchain age assets, digital assets, not just a problem there. The real fundamental problem is people's lack of ability to understand even how normal finance works inside the fiat system. That's actually the biggest problem. And what do people do because they've been beaten up by that fiat system for so many decades? They speculate on new ways to either compensate and try and get rich quick. And then they have no clue how to do that. And then when they get wrecked, it's everybody else's fault. So you need to work in a process that focuses first of all on your mindset and your skills. Get that bit right. That separates the men from the boys, the wheat from the chaff. Obviously, most people fail even at that point because they want everything done for them. The whole idea, just like getting fit in a gym, is you work with people who will put you through a safe process to understand what it takes, not just to get involved with something, but then stay involved until it comes to fruition. And a big part of that fruition in this industry is what's called tokenomics. It's your responsibility just as much as anybody else's to make sure that it's successful. That's the clever thing about decentralized, conjoined balance sheets on the internet. Think about it. It's not just isolated businesses everywhere working in some convoluted, overstructured economy that's been beaten to death by central banks and continual borrowing and jet to GDPs in negative territory. It's not that. It's about combining lots and lots of value onto one super system, which is why Bitcoin is so successful. Understand that, and then understand how to completely revolutionize how finance works within that same model across a multiple of different digital asset classes. It's happening right in front of our eyes, which is why the most successful people in our community are in the income subscription level, because we talk about this and strategize about this and work on this every single day of the week, which is what we'll talk about more in part 2 of this call today. To simplify that whole process, it's a case of us thinking, how can we utilize as an academy AI and decades of proven experience from coaches all over the world that have stuck through what it takes to be successful in their own right and get to a point whereby we can help to share that with other people. What can we do? Well, you've got 2 choices in life, right? You either charge relatively high charges, subscription levels for one-to-one, repeating ourselves all the time in terms of bringing people through that process from mindset to wealth. And we did that for many, many years, and that's where we've got our experience from. Well, now AI exists. All we've done is take all those years of combined value and resources and knowledge and a library of information and distill it through AI into 12 equal, nice and steady steps that take people from planning their business and getting the mindset right all the way through to managing wealth. For $25 a month at the skills level, you can access this structure and then go through the process. It's your job then to go through the process, not fall off after month 3 and decide it's not making you rich quick enough, but to get into a place whereby you're going through the steps and taking it seriously to get the foundations in place so you can do this on your own. That's the clever thing about the Wealth Builder series. Well done for those already involved. Now, to cut into the actual purpose and backbone of this whole session every single Monday, let's have a look at where we're at in terms of macroeconomics and geopolitics, middle of October 2025. Before we go there, just a reminder what's going on here. Stay above the canopy, avoid the noise, avoid the 2-bit YouTubers, avoid all the opinions on Crypto X. Yeah, stick to the plan. And the best way to keep yourself sane is to zoom outwards. So if you think what we've been through this last weekend was painful, you should have been around when Mt. Gox was going on. You should have been around when FTX was going on. You should have been around when Celsius was going on. COVID was going on. Yeah, it's nothing new. History doesn't repeat, but it does rhyme. And all we do is work through it and absorb more and more stupidity, frankly, from people who don't work hard enough to understand what it takes to run a digital business. So we just track on. We track on. Okay, there's nothing changed here whatsoever. In fact, it's got stronger because so much leverage has been taken out so quickly. Yeah. But the other thing you've got to be mindful of, as we'll touch on in the macro and geopolitical sections, is the politicians aren't as smart as they think they are. The perception of being 100% reliant on bosses, banks, and governments is exemplified this weekend by politicians reacting to things in a ridiculously out of balance manner. Right? Did any of us see that come? Of course. No, we can't see it coming. But do we protect ourselves from what is nothing less than either ignorance or complicity? I might even add stupidity to that after what happened this weekend. Do we protect ourselves from that? You better believe it. And we do that by making sure that we bolster our balance sheet no matter what. Yeah, the absolute way of doing that is to hold something like Bitcoin in cold storage, period, and just be a spot buyer, just DCA, and keep it in cold storage, right? Obviously, we have much more sophisticated ways of leveraging Bitcoin. We'll talk about in part 2, but do that with a small proportion of your asset base, right? Obviously, just like you would in a normal business. So the whole idea is just be mindful that things can happen. And it was a little bit concerning that that happened so quickly and so abruptly and so violently this weekend off the back of a tweet, a message. It's a lesson to us all, especially in the altcoin space, that anything can happen and you shouldn't overexpose yourself, okay? So it's quite a thing to absorb, but we've been there before. Mt. Gox, Celsius, FTX, COVID. There's nothing new under this sun, yeah? And once you've been on it long enough, you realise that this is just part of the game and it's part of the resilience. So how do we stay sane in that process of needing to be resilient, running a globally interconnected balance sheet with our own business highly affected by things that can happen? But don't think that is new because you've got worse going on in the fiat system, right? Keep it in perspective. Remember that decades of your existence, you've been affected by things that you've never even thought to question. It's just been another recession. It's just been another piece of inflation. It's just prices going up. It's just me not able to get a pay rise. It's just me working through the process, trying to get myself higher and higher up the career ladder. That's been the so that's even worse than some of the things that you'll see going on in altcoin assets, crypto, not to be mistaken with Bitcoin. So how do we stay sane with all that going on? Well, we make sure, because we're closer to the money supply than we've ever been, that we keep abreast of what's going on at the macro level on economics and the geopolitical level. Fiscal and monetary policy, basically, yeah? And we make it our business to stay across it. We've done this for years and years and years, especially since 2008, because we recognized in 2008 that that was a very, very strong signal of how things can shift and what we need to do to protect ourselves, which is nothing more than just protecting purchasing power, right? These little bumps and things that happen inside the macro and geopolitical journey ever since 2008 are just little bumps in the road compared to 2008. But we keep an eye on it, knowing that another 2008 will happen inevitably. But now we're protected, yeah? So it all stems from just simply keeping an eye on what's going on in the world. My job, hopefully, every week is to help you guys see this in just a few minutes rather than the research we necessarily do. Remember, we're full-time. Okay, we're full-time digital asset business owners. So it's our job to do this. The Academy is part of what we do in terms of leveraging value. So Tether plans to nominate its own board candidates for Juventus FC. So these little fun things need to come in, right? But this is more than fun. This is the power of what's going on when it comes to companies, yeah, taking steps to become part of a digitalized balance sheet. Yeah, they're putting digital assets on the balance sheet, and Tether are a big part of that, of course. S&P 500 announced the launch of the S&P Digital Markets Index on the 7th of October. It combines 50 major cryptocurrencies, including Bitcoin, 35 related stocks to track the broader digital asset market. This is the first index directly to blend equities and crypto. Think about that. Think about that. If you're still sat on this misapprehension that your pension, especially a contributory pension, is going to be something that magically sorts out your purchasing power for the rest of your days, then obviously you're taking a high risk doing that. But the fact that now your pension indirectly will start to be a part owner of the digital space assets, especially Bitcoin, we'll keep an eye on cryptos for obvious reasons, but especially Bitcoin, then that's got to be a good thing, right? It's in other words, we're moving stock markets and big financial institutions and pensions and savings plans, we're moving them towards sound money based on Bitcoin. Yeah, the jury's out with cryptos, obviously, we'll have to see. Altcoins we'll have to see. But Bitcoin certainly has already proven itself. Gemini reveals credit card holders earning Bitcoin for at least the last year. Saw an appreciation of 277% on average. All right, that's compared to 0% on the equivalent type of financial instruments in fiat. 277% appreciation, right? Can't get a hold of Gemini credit cards just yet in the UK. I don't think in Europe either, but you certainly can if you're based in the US. So you guys doing that, well done. Any feedback, we appreciate you to hear it, but we're keeping an eye on that because, as we'll report later, the UK, particularly the Europeans, are asleep at the wheel as ever. But the UK politicians seems to be following the US model now. So we'll see Gemini, I expect, very shortly with this type of facility. We're looking forward to it. We're leveraging these types of things in TradFi already through lots of things we'll talk about in part 2. Bank of England scraps the limits on stablecoin holdings. This is, again, just the start of that process. They're not going to do any flag waving or, shouting from the rooftops on this thing. You have to go and find this information. You're certainly going to get it in mass media. It's not in the interest of the central bank. It's not even in the interest of the government in the UK to make this known through popular channels. Okay. But if you understand what we understand and you know where to look, then you'll find this is how we stay ahead of the curve. This is how we get the tailwinds into our balance sheets because we've been at this for so long. So watching the Bank of England dragging the feet, kicking and screaming, having to follow the states is just a privilege to watch. And the idea is that, we just take net benefit from that because it all in the end is on a conjoined global balance sheet. Morgan Stanley just removed restrictions allowing wealthy clients to invest and allocate retirement funds into crypto. Okay, so it'll start with the wealthy as ever, and it'll filter down. All right. So Morgan Stanley opened up crypto funds and ETFs to all clients within a couple of weeks. Yeah. So it'll start with the big wealthy people and it will filter down, right? That's a couple of weeks as of last week. This is how fast this moves, right? Just look at the signals that sends out. Look at how many people now will find misunderstood peace of mind, let's put it that way. I mean, most retail people will move into this type of asset class through the likes of Morgan Stanley, through the likes of BlackRock, through the likes of Vanguard, right? Our philosophy at DBM remains the same. You need to be self-custodian. Do not trust these people. They've not been trustworthy for the past 50 years. Why would you trust them now? But unfortunately, the vast majority of general public are just going to take the easy option, right? That's why bosses, banks and governments are able to take advantage of ordinary people so much, because ordinary people don't educate themselves. They just haven't got what it takes to be able to run a digital business. Our philosophy is be a business owner. Don't be someone who just follows and hopes to get for the best. That's not the way it works. Nobel Peace Prize winner last week came through, a lady from Venezuela, fair play to her. And she was very quick to confirm and state that she's bullish about Bitcoin because she knows it's a lifeline to so many people, especially in Venezuela, and it has been for well over a decade. So fair play to her and congratulations to her. Second page macro, just briefly, Arthur Hayes did a podcast on this. It got released this weekend. Go and listen to the podcast over at the DBM Academy. Just press the little microphone and you'll hear this in very deep detail with regards to where we're headed with Bitcoin and where he sees us now dissolving the 4-year cycles in Bitcoin, which is true. And that's fantastic. All we're looking for now is just steady growth up till 2030, $1 million Bitcoin. Your job is to understand how to dollar cost average into that. Own more Bitcoin next month than you own this month, and just keep understanding how to leverage that on your own balance sheet. That's really all you've got to do. Okay. If you want to get more sophisticated, we'll show you how to do things in part 2. Okay, so SEX is also liquidated collateral tied to cross margin positions, which is why so many alts got wrecked this week. Okay, or just on last week. It's all recovering relatively quickly, but it just shows you just the way people structure is just mind-boggling. I just don't understand it. European Sovereign Wealth Fund just added Bitcoin exposure through Bitwise ETFs. The world's largest wealth fund holds trillions of dollars in there. And the idea is, again, kicking and screaming, dragging their feet like a spoilt child. The European Union is finally coming round to the fact that it can't beat them, join them, but it's so slow, it's not funny. Yeah, we've no time for that. Don't be reliant on bosses, banks and governments. Make it your business to get in front of what's going on and then leverage the tailwinds. That's the privilege of the communications age. That's the privilege of being able to access freely any assets you wish on a conjoined balance sheet. Look at the size of these sovereign wealth funds, especially Norway. Fair play to Norway. Yeah, absolutely brilliant. And it's a case of us making sure we know that. If it's not happening in your country, then write to your MP. Write to your senator. Why are you not putting these assets on sovereign wealth funds on behalf of the people, for the people? Why? They won't know. They're like financial advisors. But the whole idea is the more people understand this, we vote with our feet and off we go. So make sure that you're putting pressure on your politicians for sovereign wealth funds, in my humble opinion. Now, the largest liquidity event ever experienced in the digital space happened on Friday. Absolutely diabolical. Reported 20 billion, in reality 5 times more than that, right? It doesn't really matter because the people who got wrecked are the people who just do not understand how to structure their assets. They leverage in trading terms. They leverage, okay? Resist over leverage when you're trading. There's no quick win, ever. Everybody knows that. And just because China reported a maneuver on tariff threat, it was misread. Reports tell us it was misread by the US, and Trump, being Trump, just reacted. We know what he's like. So all you can do is read between the lines, but not get caught out. Right? So crypto liquidations exploded to roughly 20 billion in 24 hours. It was much more than that. And the largest single day liquidation event ever, 17 times bigger than COVID and 13 times bigger than FTX. Now, we've lived through both of those, so we understand that these things will happen and will continue to happen. But you've got to make sure that your business is structured in such a way that you do not get affected. It's not easy to do that. It really isn't, because you never know. You just never know. But the only safety you've got is purely to have cold storage. That's your ultimate number one, 100% safety, right? You need to think about that and build into that. If you're still building your structure, think about cold storage and get yourself prepared for cold storage. If you're working in hot wallets, if you're working in trading accounts, if you're working in exchanges, if you're working in, different projects, then just know that things are under jeopardy, right? So that's why you've got to diversify. And we talk all the time about making sure little things are in place, like having yourself multi-sig, organizing your structure and security. Yeah. But most of all, don't try and make a living off leverage trading. Right? We've not mentioned it for a while at DBM because I assume that it's just known, because we've spoken about this forever. You can't make a living. They'll eat you they'll kill you. The normal trading community will kill you, let alone what happens when these big seismic geopolitical mistakes happen, which is what this basically was. Right? What does it mean now? It means that we've got a very much more clean environment on which to now kick on. And you watch Bitcoin go now, and several of the altcoins, to be fair. And those of you with liquidity and working capital and understanding how to take advantage of other people's stupidity, that's when you get ahead. It's probably put a lot of people, more sophisticated DBM members, it's probably put you a year ahead the way you would have been. Right, if you've got working capital to take advantage of the dips. So congratulations if that's you. And if you've got liquidity events coming up, look at this as a godsend. If you know not to get caught next time, because it can go as quick as it comes, right? Get the skills, stay safe. Last but not least, geopolitics. All right, obviously, we've already touched on quite a lot of geopolitics. One of the biggest effects of geopolitics that's ever been seen happened on Friday. So I think we've said enough about that. But in terms of the bigger pictures going on around the scenes, it's not just about looking at these short-term hits. It's about making sure we understand the big picture, because our job is to continually be working in a way that we find the tailwinds. We want our spinnaker up all the time, right? It's the best place to be. You're flying along, and as long as you know where you're going, you'll get there, no problem at all. White House wants to pass the crypto market structure bill this Q4, which is a big deal. Yeah, big deal. I know they keep talking about it, and we've already got this ridiculous shutdown going on, and everything feels like it's in pause mode, and it feels a little bit unwieldy. But they'll get back to it. Don't you worry, there are things going on behind the scenes, right, as ever. EU eyes centralised crypto oversight. Again, the EU, the old man, figuring out that he's going to have to just give up and get his grandson involved, right? They just need new blood in there to bring through what needs to be done in the 21st century. So EU planning to shift the power from national regulators to a single central authority aiming to unify financial crypto market rules across the bloc, right? Now, that's positive in the sense that they're recognizing they need the equivalent of a crypto czar, but obviously it's negative in the sense that the EU is just this one big, regulatory cesspit. Yeah, it is what it is. There's nothing we can do about it other than put pressure on our politicians locally to improve the quality of these regulators. But it's a process of time, not a lot you can do. That's why we've got to focus on the positive, which is them even talking about bringing in something like a crypto czar into the EU and its purpose. The world's largest prediction market, Polymarket, is now accepting Bitcoin. That's for another 4 million users coming through globally, okay, in terms of understanding that they can access Bitcoin and starting to see that as a formal structure inside their traditional financial structures. Yeah, positive again. Sweden, God bless Sweden, do a great job. Proposes moving Bitcoin capital gains from taxes. So they're spearheading that. Yeah, we just heard it actually this morning that Thailand apparently have confirmed that that's going to be the case in Thailand. No more capital gains taxes on Bitcoin specifically. And Sweden are also considering a strategic Bitcoin reserve. Get on with it. Put some pressure on your politicians. You need these Bitcoin reserves inside your country. That would cover a lot of the challenges over the next decade or two when it comes to people who need support from governments. Yeah, obviously don't be them type of people yourself, but if we can get the overall looked after by working with accretive assets on joint balance sheets across countries, then that's obviously a much better thing than printing currency or ridiculous tax rates. So the sooner countries appreciate accretive assets, the better. UK, as I say, goes back blockchain now. They've given up fighting it. It looks like very clearly now. The government will appoint a digital markets champion, or there's a crypto czar, just as Europe have done, just as the US has already led on in the last 9 months, in efforts to lead digitalizing wholesale finance across blockchain technology. Welcome to the party. You're late, but welcoming. Yeah, as ever. We're way ahead of that as individuals because we're closest to the money supply, and we're simply absorbing what's going on globally to make a benefit to our individual businesses. Luxembourg Sovereign Wealth Fund, FSIL, becomes the first Eurozone state to invest 1% of its holdings in Bitcoin ETFs. Europe's waking up. Okay, so overall, very, very positive this week. Yeah, a ridiculous mistake by two of the biggest countries in the world, jittered the markets, and everybody got wrecked who exposed themselves. But overall, you've got a much, much, much cleaner position opening up now across this landscape that only a year ago I would never have thought I'd be saying. We were ready for the fight. We were ready to carry on like we've done for the last 10 years. putting up with these short-sighted, ignorant or complicit politicians and central bankers who just want everything to stay with the hegemony. That is changing very quickly. And those of you who've listened to what we've been saying over the past 10 years, kudos to you. Like I say, this is a big topic. There's so much to absorb. It's overwhelming. It can take time. It feels, frightening. Of course it does. The idea is to get the skills, right? And to do that, you put yourself in front of people who are doing this every single day for a living. And I've done it for well over a decade. And the Academy is now over 5 years old. This is a lifetime in this space. If you're listening to people with opinions and all sorts of people out there with all these opinions, good luck. Work with people who've got what you want and can prove it and are already doing it and have done it for a long time, right? And as I'll talk about in part 2 now, you'll see the link below in the comments in YouTube. Then you'll see that we work very practically. Yeah, it's not easy, but we work very practically. We'll see you over there. Take care.